Welcome back, and there goes the bell. Time for market analysis. And of course, our research analysts are still here to help us decipher now specifically how the numbers are doing. And I want to start over with a bit of a discussion on some of the top gainers and what we are seeing. I can see we have I&M Holding, we have Sanlam Total, Bamburi, and Williamson Tea. Let me start with the I&M Holdings, and probably you could also mention about Williamson Tea, Emily. Why are we seeing this excitement?
I think for the I&M, there's a bonus 1-for-1. Okay. So for every share you hold, you get an additional bonus and even a dividend declared. So I think that is what is exciting the market or even investors about it.
All right.
Yeah.
What about the tea? Are people taking a lot of tea?
Yes. I believe now the agricultural sector, as we had mentioned earlier, is doing quite well. So tea companies are doing well. In terms of even COVID, the uptake is quite good.
Oh yeah, actually, because especially with the weather and the healthy eating, I mean, there's a lot of that being taken in. Kevin, I don't know whether there are some sentiments you want to give in within the top gainers. We still have Sanlam Total at Bamburi. What would be your comments?
I mean, I agree with Emily in terms of when you look at Williamson. I think they're going to be quite resilient, if not better.
Yeah.
Other than the staff who are affected maybe by the COVID and all that stuff, and the penetration on those tea plantation areas is not as high as in this zone. And maybe that's one of the reasons that advised the closing up of the 5 counties.
Yeah.
So that's good news for them. I think when you're talking about tea, it's also good to look at the global auction prices, because most of the times prices are not determined at the farmer's level, at the company's level.
Absolutely.
So we have to look at global tea prices. And I think one of the best tea producers in the world, Brazil, we saw quite some challenges when it comes to roasted dried tea in terms of how do they get it to the Western Europe countries, the American countries. We've seen there's a problem of a shortage of containers for sea freights. So that has really affected the price, and guys were now hoarding whatever they could get, and that's really working well for us because whatever tea, the markup in prices are going to be realized back home. So I think for Williamson, it's starting from the global, escalating it down. It's really a good pick for that.
Yeah, and I think also a diversity of products in terms of tea. When we have now green tea, the herb, the flavored teas,
some ginger inside, all that.
Yes,
I mean, those are high margin businesses, and right now you walk in. It's not like 5 years ago. Us growing up, we knew tea as tea.
Yes.
I think if you're bougie enough, then you could have masala tea or ginger tea. But now you walk in and you can get your.
There's now red tea and purple tea as well. Courtesy of that. All right, let's jump into the top losers as well. Interesting names here. We see Cooperative Bank, I see Samir Group, Flim Tree, Unga Group, and I just want to start with you, Emily, as well. I don't know whether there's a name here that you want to talk about.
Yeah, I'm just looking at the Unga.
Yeah.
The costs in terms of a ripple effect in terms of fuel for the manufacturers that cascades back to the cost of even production, yes, and even now the increase in price, and even the VAT reintroduction to 16%. I think that's what's coming into place in terms of the cost of production.
Okay.
Yeah.
Interesting. I don't know, Kevin, some sentiments on them, on the losers?
When I look at, say, the banking store like Cooperative Bank, they announced a dividend for 1 shilling, and the book's closure was 31st March. That's just roughly a week ago.
Yeah.
So it's understandable to see why it would be losing, because what happens post book's closure, and that's for those who don't understand, book's closure is the last day that you can be booked to have the dividend. So if you're holding that stock by 31st March, you'd be booked to have the 1 shilling dividend. If you had sold, then you might not get it. So what happens to the share price? It readjusts by almost as much as the dividend. So if the share price was say 13 and the dividend was 1 shilling post books closure, you'll tend to see the share price tend to go around 12 levels. And maybe just to mention one other name that you'd mentioned, sorry, that was in the gain, and that's Total Kenya. Again, it goes to the point we were talking about. It's good for shareholder to see that Total actually were doing quite well. They're among the top gainers, and they announced some solid numbers. They actually had a really good half year. I was talking to part of the management. They had a really good year, partly because of lubricants, the margins on lubricants and those other things, outside fuel, and also because the demand for fuel in the second half, I remember them mentioning, was almost more than the normal pre-COVID levels, yeah?
Okay.
So that was a really boost for them. But then again, what does that mean for you when you're going to fuel your car, yeah? So it's good for you as a shareholder, but for you as a consumer.
Absolutely.
Yep.
Emily, the indices look like they're going down.
Yeah, and I think this is mainly after the announcement of the financial results.
Yes.
We looked at the different numbers now that almost all companies had a decline in profits.
Yeah.
That affects and the indices in terms of prices, the stock prices. You see some of them are, the prices were dipping towards the end of the quarter.
Okay.
Yeah.
All right, Kevin, maybe we could finalize this on numbers with just the movers. I can see Safaricom, I can see EABL, KPLC, and of course Equity Group Holdings. Any attributes to this?
You'll always see the movers coming from the NSE 20, and those are merely the blue chips, yeah, the top 20 stocks. It's very, very rare to see a mover coming off the top 20. We might have outliers here and there. I think, for instance, we have a Chumi. I don't think it's an NSE 20 member, but yes, it's understandably so. One, because of investors will most likely, especially during these times of uncertainties, stick to blue chips. Yeah, those are the top market cap counters. Foreigners, when they're looking at Kenya, they're not going to look at Momi, as you know, for liquidity purposes and all other reasons. They're going to look at the blue chips, so your banking stocks, your Safaricom, and your manufacturing stocks. So it's understandable to see them in the movers. Yeah, and of course, again, thanks to the numbers that we saw, you're going to see some movements here and there.
Great.
Yep.
There you have it, courtesy of the numbers and the analysis. And thank you so much for really helping us with this particular big numbers, as we call them. Right about now, we get to Markets 101. So in Markets 101 today, we just want to really put an ear to what Kenyans are complaining about, because there has been all this hashtag going round about debt burden and all that, and trying to really converse with the international donors. Are they doing it to the right people? Are they not? And I want our analysts here, who are experts as well, to help us and understand really what's going down. So Kevin, let me start with you. Are we on the right direction?
I'll try and echo the people's voice here, yes, and say, yes, I can understand the burden that Kenyans are facing. Yeah. We've seen the executive come forward and say, you know, we lose almost close to 2 billion Kenya shillings every single day. So when Kenyans hear that and then go to the extent of hearing more loans are being loaned to us, then it goes to the debt burden that they're going to face. Because the only way we can repay those debts is either we raise our taxes or we raise our production. That means our GDP. With the pandemic, it's quite unlikely we do the latter and do the earlier. So Kenyans are speaking up, and we are a democratic nation. Thank God for that. And I think they're going to speak up in whatever avenue they face. Lately, it's been the IMF, partly because they're the ones who've been loaning us. And when you look at the numbers, I mean, Kenya in the first 3 months of this year has consumed more than 8 months of the last year. Yeah, just to put it in perspective. IMF, I think the reason you're seeing Kenyans on most of IMF pages is because IMF have been the biggest donor to us. And they're part of the Bretton Woods. So the IMF is part of the World Bank. So if you're going to combine what the World Bank and IMF have given us, I think it's close to 400 billion Kenya shillings. And that's why I think Kenyans are taking the rage on IMF. But if you look at the numbers deeply, we have Japan who've loaned us, we have Russia, we have the EU, we have America. So a couple of guys who've loaned us. And debt is not bad. I'd like to tell Kenyans, and just play the devil's advocate here, debt is not bad. And I don't think Kenyans really, they're not vocal because they don't need the money. It's, I think, in terms of efficiency and how that money trickles down to them.
All right. Emily, what's your sentiments on that? I
agree with Kevin here in the fact that debt is not bad. It's accountability. Okay. If I think our government was accountable in terms of we've borrowed these from these infrastructure projects, because you even see nowadays in infrastructure bond prospectus, it's not really put in detail what's going to fund. It's just told infrastructure projects within this financial period. I think accountability, because previously you'll see this is going to roads, this is going to sewerage and water. infrastructure projects in that, such that even if it's time to seek accountability, it can really be told these funds were channeled to this project and this is how it fared and this is what it's fetching. So accountability, I think, is the biggest question here on government. In terms of borrowing, yes, but account for it, because we want progress. We are happy to see the expressway.
Yes.
We are happy to see the trains.
Yes.
But it's important to see that these funds are being utilized as intended.
All right.
Maybe just a final thought on to that, And I was looking at the numbers, and again, that can make you understand why Kenyans are very vocal, especially during this quarter. And if you look at, say, 2013, our interest payments on debts, public debt, was around 283 billion, per annum. Currently, 2021, we are talking about 1,015 billion.
Wow.
So that shows you, during the last 7 years, we've accumulated close to 6 trillion in debt.
In debt.
And just servicing that debt, not repaying, servicing that debt is going to be 1,015 billion of our revenues. We're talking about a country with GDP shortfalls of more than 10%, budget shortfalls of more than 10%. People are just looking at, yes, the external debt. There's also the internal debt that we need to look at, We have, Emily has just mentioned, for instance, we just closed an IFB yesterday, an 18-year infrastructure bond. For those who don't know, an infrastructure bond is when the government wants to build a road, a dam, an airport, whatever, a school. They'll come to you and tell you, you want to build this school. We are looking at around 50 billion. We're going to raise it. If you want to give us your money, you can give us. We will not charge you tax on interest. They're very attractive. But nowadays, the government is gangster. They tell you it's an IFB. We're not going to charge you tax. Don't ask us what you're going to do with the money.
Wow. There you have it. I can't add a sentence on that. Let's go straight to your questions. All right, Emily, the first question goes to you, and it's, what are future and forward contracts? These are questions from the SMS platforms. What are future and forward contracts?
Future and forward contracts are more of agreeing on a price of an asset today, but delivery happens in a future date, a future determined date. So you will find futures are more standardized, and you'll find in more cases they're exchange traded, but you'll find the forwards more or less the same, agreeing on an asset price today for a future date delivery, but now it's more of OTC trading, like between the two parties. It's less standardized, and it's upon the two parties to agree on how, in terms of quality of the asset and such details.
That's a loaded question. Thank you so much for that. And Kevin, there's another one here. What effect does the financial crisis have on the Kenyan stock markets? I think this is in general, maybe financial crisis, you could probably figure out maybe what we are going through right now. What effect does it have on the Kenyan stock markets? Next for that question.
It's a good question. I think the effects, the financial crisis, the guy who asked the question just focused on the Kenyan stock market.
I think so.
But any crisis usually affects almost the entire economy as a whole. In different levels, yes, but the entire economy as a whole. So we've seen, and I think we mentioned it early in terms of the stock market performance, we've seen the indices lag or remain stagnant. And this is the start of the year. Normally it's supposed to be bullish past January. You know, guys have come from holiday, guys are rejuvenated. There's new money coming in, all the pension monies, the international guys are looking at us. Kenya had just been elevated in the MSCI Frontier 100 after Kuwait was upgraded. Kenya was elevated, meaning we get more weighting. Ideally, what that's supposed to mean is that we are supposed to see more investor inflow into the country. But what have we been seeing? More investor outflows, because of course of the uncertainty. One, we are a frontier country. Above us, there's an emerging market, and then we have the developed worlds. So if you're seated in the US and you have diversified your portfolio and you want to cut risks, the first place you're going to look at is your frontier countries. These are your third world countries. So, and that's why it's not for anything we've done wrongly. It's a general trend when we have pandemics. So the stock market has really been hit. I can say that for a fact. We've seen banking stocks, I think, being hit in double digits, and I'm talking about 30% or more. We've seen also the telco trying to be resilient, but also facing strong headwinds. And coming all the way from all-time highs of 39.5, now we're talking about 37 levels. So it's been dire.
And even once in the hospitality as well.
Correct.
Absolutely. Thank you so much for those, and thank you so much for your questions. We'll always try our best to give you the best answers that you can so they can become a better informed investor. There you have it for the day, and absolutely thanking you for your valued company. That's it here for the Trading Bell Show. See you next time, same place, same time.